if you incorporate your business, and I like to give examples by way of incorporation. So I opened my beauty salon, and I'm an LLC, and it's Rishma's Beauty Salon. And I did my EIN number, I did my incorporation, but I did not select S Corp because that is a different IRS form that you have to fill out and submit. Yeah. Just because you have an EIN number doesn't mean that you're automatically an S or a C. It just means you have an EIN number. So you have to take another step, a secondary step, to either get the S or the C. So let's say I'm working on my beauty salon. I am, I have my hairdressers. I have expenses, of course. I have income. I'm paying myself as the owner of the LLC, but I did not elect Subchapter S. So does that mean now that maybe we should explain to our listeners what that pass-through means? And on top of that, can I now go back and go, oh my gosh, Karen makes so much sense. I want to do this now. And it's been 5 years since I've been doing my salon. And how do I even fix that?
Sure, I'd love to explain that. So the pass-through income basically works this way. You have a S Corp tax return. It's a Form 1120S. And you file that corporate return with the IRS, and that corporate return issues to all of its shareholders, whether it be 1 or 100, okay? It issues a Schedule K1. That Schedule K1 gets reported on your individual income tax return, the same way that your W-2 gets reported, interest income, all of the income streams that you have get reported on your individual return. And that Schedule K1 flows through with the business income onto your personal return. So the 1120S corporate return filing is only for reporting purposes for the IRS. That Schedule K1 flows through onto your personal tax return, and then your tax liability is determined from there. So the question you ask, well, I'm an LLC and I have my EIN and I'm doing business activity. What if I didn't apply for S status? The answer is, in certain situations, with the right type of representation by a proper CPA firm, you most certainly in most situations can retroactively apply. There are certain, what we call in the tax arena, revenue procedures that allow you, I call them get out of jail free cards. It's oops, I forgot. Oops, my
I didn't
prior
know.
CPA didn't do this right. Or, I didn't know. It's kind of like a get out of jail free card if done properly, and you can retroactively apply to be an S corporation and proceed with the filing that we talked about, doing the 1120S, having the pass through. Here's where the boutique firm experience comes in. I like to look at my clients and look at the type of business they're involved in and speak with their attorney to see, well, they had losses. So it's really not beneficial from them from a tax perspective to file this retroactive filing and file an S corporation. So if the attorney doesn't believe that they're at any risk of a lawsuit or anything like that, I tell them there's losses, really no tax savings here with doing an S corporation. Let's just file it on your individual return. And once you start to generate a profit, then we can go the S status route. And that's the recommendation that I make. But it's important to weigh, I can't always be the tax hero. I have to be the hero for the client. So it's important to weigh, the legal ramifications of being a sole proprietor or a single member LLC versus being that S corp. And both LLCs and corporations can retroactively do that S election.
The content on Mind in Your Business is for informational and educational purposes only and should not be construed as specific legal advice. This show discusses general legal issues affecting business owners. Opinions of the guests are not necessarily that of the show. If you need assistance with your specific legal issue, please consult with a licensed attorney.